Hello, guys. This is Vinny from Edge Forex, and today is Monday, the 13th of October, 2025. And I've been coming back after a bit of a hiatus because of some personal commitments, some travels, wasn't keeping well for a little bit. So I was at the Forex Expo last week, and guess what, guys? What an eye-opening experience that was. I will cover that in a separate live, but first things first. If you have not seen this current chart, I'm sure you guys know what I'm talking about. I'm talking about gold. And I was shouting from the rooftop when gold was at 2000. Like, guys, time to get in, time to get in, time to get in. But once it broke that top line here, right around here, the top line resistance at around 2000, a little maybe 2030, 2040. But look at now where it's at, guys. It has literally doubled in a span of very, very few months. In less than a year, it has actually doubled, maybe a little bit more than a year. Doesn't matter how long it has taken, but it has gone vertical. Guys, no matter how much I love gold, I think it's overshot itself. It's gone way beyond any breakout that I have ever seen in my entire trading career, other than manias like Bitcoin. I don't even consider Bitcoin as an asset class. It is just an absolute disaster that in a making. And a lot of people died, guys, committed suicide on Friday and Saturday because Bitcoin took a fall of say 15 to 20%. Guys, do you really want to be in an asset that is so volatile that can wipe your entire portfolio in a matter of seconds? I don't think so. And no real asset class would behave like that. That should tell you, that should be sign enough that crypto is not a real asset class. Crypto is just a leveraged bet on NASDAQ. Because if you overlay any crypto chart with NASDAQ, you will see exactly what I'm talking about. I'll try and do it now, but first things first. Gold. Guys, gold has overshot. And I think it's time for caution. It's time to look at gold for what it is. It's a safe haven asset. It's a bet against volatility. It's a bet against uncertainty. Uncertainty. And what was the uncertainty that caused gold to rise? What was the trigger? 2 years ago, it was the Gaza war. It was the Israel war. And guess what has happened today? Exactly 2 years after that. There's been a truce, and there is all the captives have been released back to Israel, and all the captives from Palestine have been released back to Palestine. So the biggest trigger for the gold over the last 2 years, what started this panic, started this mania, almost mania-like event that has resolved. And if we look at technical skies, you're looking at a weekly chart. Monthly chart, guys. Okay, and this is no joke. Monthly is as basically, you can have a quarterly chart, but it doesn't really give you a whole story. Monthly chart is as, I guess, longer chart I would go. So look at the RSI is at 91. Guys, it has, because when was the last time it was 91? Never. So gold is in uncharted territories right now. So is silver. I'm talking gold. That also applies for silver. Silver, but the only thing with silver is that silver recently broke its all-time high, even though gold broke its all-time high a while ago. But look at this mania type move that gold has been making. It has gone absolute parabolic in a very short amount of time. The RSI is sitting at 91. That is begging for correction. Earlier, gold was begging for a reason to go high. Right now, gold is begging for a reason to go lower. And I wouldn't be surprised, guys. I would not be surprised if gold were to correct 10, 20, 30% in a matter of days or weeks. But look at how much correction ideally should take place. If gold was not an emotional asset, we'll look at that. But Gold right now is trading outside of the top Bollinger Band. And that has never happened. Every time it has tried, look around here, it's come back. Look around here, it's come back. And now it's the extreme version of it. And it is going to come back. It's not the matter of if, it is matter of when. So if you are overly exposed to gold, time to lighten up. I know you didn't want to hear that, but here at Edge Forex, guys, we want to be telling you what we think is best for your portfolio. We want to do the right thing. I don't want to fuel this mania any more than it already has been fueled. So, time to lighten up. If you're holding, I'm just making this number up, 100 ounces of gold, bring it down to 40, 50, 60. But always have some exposure. If you don't have any gold, I'm saying even at these prices, you must buy gold. You need that protection. Gold is insurance. But if you bought gold, if you have a base portfolio and you bought it to ride this wave, time to lighten up, guys. Because all the reasons that gold went up are kind of resolving themselves out. Okay, another reason was Trump. Uncertainty that Trump brought, all those things, the tariff, all the things, even though they are not fully resolved, but they are getting close to getting resolved. So everything that caused gold to have the kind of parabolic rise are being resolved. I'm not saying gold's going to go back to 2000, no. But can gold go back to 3,200 or say 3,200, 3,500? 100%, absolutely. And it can do that in a freaking flash. Okay, so now that said, let's look at some numbers. Okay, guys. So we know the pattern it made. I'm going to remove all the indicators so we're looking strictly at the price action here. No indicators, no whatsoever. Okay, so let me look at a brush here. So let me draw this cup. Here, and then there was, let me draw again, brush, and this cup and handle pattern that it actually broke around 2000. So this is the neckline that it broke. So let me draw everything out. So it'll give you guys an idea as to the thought process that I go through. Okay, so now this is the breakout right around 2050, as I said before. So now, how did I know, measure what I expecting at the time it broke out? Okay, I took the price from the top of this cup to the bottom of the cup. So now that's a safe way of measuring what to expect on the breakout. So it is going to, at the minimum, a breakout is going to give us this kind of move, which is about $976. So here, say from 2,000, say up to 3,000. So that was a move that was actually expected. Okay, let me draw that out. Where did it go? Huh. Weird. Sorry, guys. Where did it go? The price one. Huh? There it is. Oh, from here till, say, 3,000. That's the move I was expecting. So now it has overshot by 100% of that particular move. That's way, a lot more than I expected or had hoped for. So now that's where I expected. Now, can it theoretically come down to that level and then have a moonshot? That would make a lot more sense. That's what you want gold to do. That's what you want any asset to do. 2 steps forward, 1 step backward. 2 steps forward, 1 step backward. Right now, we are sitting at a parabolic move, and this is where the caution needs to come in play. You need to be very, very careful as to what is it that's happening. And I really think that you guys need to lighten up. Whoever, as I said before, do not liquidate your positions. Lighten up. When I say lighten up, 10, 20, 30%, 40%. Have that core position, because you never know in Trump's era, anything can happen. That idiot can come out and say something totally out there, and next thing you know, gold's gone up another 10, 20, 30%. You don't want to so rather miss that move. So lighten up. And when it drops down to I think it's when it drops down to say 3,000 to 3,300, that's when you want to get back into gold. And that is going to be a once in a lifetime opportunity. Now, can that be triggered by a financial crisis like it did in 2007, 2008? Absolutely, 100%. See here, right around 2008, gold had a moonshot like this. And then there was a great GFC, the great financial crisis, that brought gold down to by 50%. So actually, that's post GFC. GFC is right here, 2008. I'm sorry. So gold had a moonshot. Okay, it went all the way from say 400 all the way. See, because after that, price actions is so huge. So now this is not looking as big, but it was at the time, it was big. From 400, it went all the way up to 1,000. Okay, and then this is January of 2008. And then the great financial crisis happened. Okay, everybody wanted liquidity. And what is the most liquid asset in the marketplace? That is gold. So everybody went out and started selling their gold because they were getting margin calls. And I'm sure you guys in trading, you know what a margin call is. In a margin call, you sell whatever you have to raise cash, because that is what is required at the time. So that what happened. So that at the time, gold also sold off. So now is a similar event going to have a sell-off in gold like it did in 2007, 2008? I think it's possible. I think it's likely. So that had a fall of gold, fell by 30 to 40% in matter of months. Okay, then it had a run up again. Again, it fell. Run up again, cup and handle formation, and the breakout, historic breakout. So the bigger the breakout, the bigger the correction also matches the breakout. So be very, very, very careful as to what you guys wish for. You wanted a parabolic breakout, you guys got it. Now is the time to book some profits. So silver is the same story, guys. Silver and gold miners, exactly the same story. Nothing goes up in the straight line. Please, please, please understand that. You will have a step down, 2 step forward, 1 step backward. And that must happen in any healthy bull market. You don't want anything to go in a parabolic way, because once it goes straight up, usually comes back straight down. And obviously, you guys don't want to see that. And that's it for today. I will be back tomorrow again, and I will be talking about some other assets like dollar, stock markets, other currency pairs, and all of that. But I wanted to address the elephant in the room, that is gold. And I think I've made my point. All right, guys, I'll talk to you tomorrow. Till then, take care.